This week, we start to present a balanced view of the property market. Over the next few weeks, we're going to feature a range of respected property professionals and proven industry commentators from Bricks Mortar Media's annual property market forecast report that's just been released. Hey, if this is your first time with us, welcome. You're going to find us on all podcast players and through the Southern Cross Oz Stereo Network. If you like the show, please hit the subscribe button. Help us to continue to bring you the best guests every week. Join the conversation too anytime on Facebook at the Property Hub Collective. We'll be back in just a moment as Bushy kicks off this week's show with Nicola McDougall.
Property deductions can save you thousands of dollars each year. To make sure you maximise deductions, you need to work with the most experienced quantity surveyor in the country. BMT Tax Depreciation is the leading specialist in the industry. They've completed over 700,000 tax deduction schedules for residential investment and commercial properties Australia-wide. BMT guarantee to find double your fee in the first full financial year deductions. Call BMT on 1300 728 726 today for an obligation-free quote. Realty Talk and your host, Bushy Martin.
Now that we're all back in the cut and thrust of the year, when sadly the news is often filled with sensationalist, fear and greed-driven clickbait headlines about property, we thought it opportune to share some more balanced views from a range of respected property professionals and proven industry commentators and on what's actually likely to happen in the wonderful world of property this year. And there's no better place to get the good oil than Bricks Mortar Media's, or BMM's, annual property market forecast report, which has actually got a proven track record of capturing reliable predictions from industry leaders that consistently prove to be on the money. So to kick off our BMM expert expose and to whet your appetite on what's in store for 24, we're joined by show favourite and friend Nicola McDougall, the director of Bricks Mortar Media, who wears many property hats, including her pivotal progressive role as the chair of the Property Investment Professional of Australia, or PIPA. So welcome back to the show, Nicola.
Hey, Bushy, thanks for having me. Happy New Year to you, my friend.
Yes, same to you. I'm pretty excited about the year ahead in property, and I actually love the fact that everyone gets on the bandwagon at this time of the year and comes up with all sorts of rubbish around property. But as you and I know that have been in it for long enough, if you're doing the right thing in the right place at the right time, you're always going to do okay. So I guess to get into it, Nicola, there's certainly no doubt that property surprised many of the mainstream punters on the upside last year. So how did property perform against your expectations for 2023, and what, if anything, varied and why?
I think it's interesting because our report that we put out every year, we're generally doing, the commentary or the forecasting late November, early December each year for it to be released just before Christmas.
Yeah.
And so the previous year, I think there was a little bit of nervousness if we compared it to the 2022 report. There was a little bit of nervousness because we were in that sort of interest rate rising cycle. However, I think the fundamentals were underlying even that sort of the jitters that might have been out there over last year. And what we saw clearly was even in a period where rates were getting hiked, almost every month, we had that underlying very, very strong demand, coupled with really at that point an undersupply of properties for sale in most locations around the nation. And so what we saw was, prices just continue to strengthen throughout the year and, recently hitting record highs again. I think a lot of people, get confused where they think that interest rates are the be all and end all of the property market. And that's been a common misconception for years. And I would like to think last year would be the year that perhaps blows that misconception apart because we had, record, interest rate rises in a very short period of time, yet property prices continued to rise. So hopefully that sort of kills that misnomer going forward. At the end of last year, clearly, we started to see a little bit of softness. I think that November interest rate rise was completely unnecessary, a bit of a brain fart by the RBA. I think it will be proven, it already probably has been proven that. So there's probably a little bit of nervousness started creeping back into the market in some locations towards the tail end of last year. But geez, this year it's already a bit of a rip snorter. Is that a new term? The market's being a bit of a rip snorter at the
I
start
like
of
it.
this year, because as we'll talk about later in our conversation, we have had some data come out which is really starting to show the potential strengthness of markets this year.
Well, let's jump straight in there, Nicola. I'd love for you to now share your overall view on how property is going to perform this year.
Look, I think I would be very surprised if we didn't have another very strong year. It certainly has started that way. You know, January's notoriously quiet, but from about after Australia Day weekend, we've started to see some very, very strong results come through, auction clearance rates, and certainly on the ground, people are saying, you know, buyers agents or people involved in, you know, in property generally, that buyers are out in force, and we're just starting to see some of those strong sales results come through again. One of the reasons for that is that we have seen that moderation in inflation. You know, I'm very pleased to say that until the November rate result, I'd actually got everyone right in the most recent cycle, and that one blew my you know, great forecasting out of the water. And I certainly follow. You know, I'm not an economist, but I spend a lot of time looking at economic data and, you know, talking to people involved in the industry. And I always felt, and there's been a few commentators out there that you know, I agree with them, or that they were saying that inflation was going to moderate far more quickly than the Reserve had indicated. And lo and behold, at the end of January, we saw not only the December monthly results come through, but also the year to December results come through, and inflation, like that monthly result had a 3 in front of it, like,
Yeah.
blow me down with a feather. I actually thought that it might. And if you think about December, seemingly everyone should be out spending lots of money because it's Christmas.
Yep.
No. So I think that really has lit a fire under markets around the nation. We had the first RBA decision recently in February, and clearly, you know, they held. That wasn't a surprise.
Yeah.
But certainly, depending on who you talk to, you know, we could be seeing a rate cut in the next few months, certainly by the second half of this year.
Yeah, it's certainly heading in the right direction. And as you say, let's hope some lessons have been learned from the exercise on the way through. But sort of drilling down a little bit then, what are the key drivers that we need to be watching out for that are likely to influence property's direction this year, do you think?
Well, definitely that's number one. That's
Yeah.
number one. I think what we are starting to see, and I've certainly heard this from some property investment experts in various locations around the nation, it's that investor activity.
Yeah.
As we know through all of Pippa's research, we saw, you know, a huge volume of investors exit the market over recent years. However, investor activity is increasing again around the nation, according to the ABS.
Right.
I think you and I have talked about this, Bushy, on the show. While investors have been selling for myriad reasons, and certainly in Victoria, the metrics for, you know, investment properties are very strong. We have, you know, the potential for capital growth this year, you know, going forward over the short to medium term, but also we have those, you know, strong cash flow from those rising rents that have to happen for a bunch of reasons, but mainly because there's just not enough supply out there, and so rents are rising. But certainly in some locations we have had fairly benign rental growth in the 10 years up until COVID. So I really think, you know, obviously owner-occs, they're the ones that drive the market. They are the majority of the market. We are seeing more first-home buyers come back into the market. Reba actually had some research out last week where the number of first-home buyers had increased 13% in 12 months. So even in that high interest rate environment, first-home buyers are back, investors are back, owner-occupiers are out there buying and spending, you know, money. Well, they're the three parts of the market, and so what do we say when we, you know, put all those together? Very, very strong market conditions this year. But investors as well. I think I was reading something actually the other day about, you know, Victoria's results, market's not actually that great. And what are the reasons, comparatively speaking, what are the reasons for that? And potentially it is that exodus of investors from that market because of the plethora of rental reforms and other legislation targeting investors in that market. And while, people might say, oh, well, fewer investors, what harm can that make? Well, it's 30+% of the market. That can make a big difference if investors are not transacting in a particular location. And it certainly seems to me that investors they have been exiting Victoria, and they are not buying into Victoria in their normal volumes. And that's not good for the overall sales market, but it's also very, very bad for its rental market.
100%. So given that sort of backdrop then, Nicola, what are some of the important areas and sectors, both good and bad, that we need to be watching out for this year?
Yeah, look, Bushy, you and I, we've been doing this for a long time. I am very, very disappointed and upset that, at the start of this year, the negative gearing genie is out of the bottle again, thanks to the Australian Greens. Last year, clearly, we were having to lobby against the Greens, seemingly wanting rental freezes around the nation. The Senate inquiry into the worsening rental crisis in Australia, the final report was quietly uploaded to its website in December. I actually found that report. I actually broke that story because I was looking for it when I came back from Christmas holidays, and I realised that it had just been uploaded very quietly. Looked for media, looked for any press releases. There wasn't any. And one can only presume the reason for that was the fact that the recommendations from the inquiry chair, who is from the Australian Greens, were all about rental freezes. Let's freeze rents for 2 years. Let's put rental caps. You only can increase blah blah. Anyway, it was completely stolen from the Greens' policies about these rental controls. So no wonder they tried to bury it. They didn't, though, and they didn't win that battle, clearly. And now the Greens are advocating for changes to negative gearing and to capital gains tax, even though the Labor government has been very firm on this. They lost the 2019 federal election by taking changes to negative gearing and CGT to that election. Yeah. So they would be very silly indeed to think about reigniting or relooking at that policy. And while, it might be a bit of a political football at the moment because of the changes to the stage 3 tax cuts, a little bit of broken promises from the Prime Minister. I would like to think and certainly believe that, the federal government is not going to be bullied by the Australian Greens in this regard. But it just is really concerning to me that the Greens have adopted this really divisive mindset with their platforms. I guess it's because their original platform was climate change, and that is wholly accepted by society now. So perhaps they're struggling to see what the point of their party is, and they seem to have adopted a mindset where it's us versus them, and that is not good for anybody. Certainly in an environment where we have a rental crisis and investors are the answer to addressing that crisis. You don't want the threat of any changes to long-standing taxation policies to impact the potential of investors either to retain their investment properties or to purchase investment properties, because it will just prolong the rental crisis and drive rents even higher.
Yeah, I 100% agree. I just why the Greens have become ambulance chasers really scares me.
That's a good term.
Yeah, it's a very scary concept, and I think you hit the nail on the head. They're looking for a reason for being, so they've got a great sensationalist, quite naive and ignorant approaches to something where what they're proposing is actually going to make things worse, not better, because as you and I have spoken on a number of occasions over the years, investors are actually a big part of the solution to housing woes, not the problem. So to continue bashing them and making statements that don't even hold any weight just really scares me, actually. And I'm just hopeful that, one, the policymakers and the politicians can ignore that squeaky wheel, and the silent majority has still got the common sense. But stranger things have happened, and once something gets momentum and the mainstream media is looking for things to talk about, then it can take a life of its own. So I think, I'm hopeful that the great work that you do at Pippa and the other associations in conjunction with the voice and support from the Property Hub team here can actually balance that message and put it out there to demonstrate that we should be embracing investors, not penalising them.
I just had a thought there, Bushy, which I don't know whether I should say this or not, but I'm going to. I just wonder if the Greens are actually their role, certainly in the media cycle now, was once the domain of Pauline Hanson in One Nation, because she would say extreme things, and now it's the Australian, isn't it? Really, if you think about it, for those of us who've been doing this for a long time and been, around for a long time, breathing, that is actually that is their role now. They're just like the 21st century version of One Nation. So there you go.
Yeah.
And the lowest common denominator in ambulance chasing, like you say, and all it's doing is dividing a wedge in our society. And I noticed actually recently the change in language that they're using in regards to property ownership. They're talking about renters becoming property owners. So I think that they've obviously decided that they need to really make sure that they are seen as representing renters, but they're bloody not, because by demonising investors, they're driving investors out of the market. They are preventing, the normal flow of investment into the market, and that will mean that there's fewer properties. The rental crisis will be even more prolonged. Rents will be higher. So these renters who have the aspirations to become first-home buyers will struggle to save a deposit because of the higher rents. So they don't represent renters, they're just representing themselves.
Absolutely spot on. So, and I know we've only just scratched the surface here, but I want people to read your comments in the BMM report, because it's a great reading there. But if you were to sum things up in a word, what one word do you think is best going to describe and capture property conditions for this year, Nicola?
One word from me, Bushy? What do you mean? Look, I'm going to say 50 words before I come. One word that's going to describe this year. Strong.
Strong. Yes, I think that's a really good choice. Well, look, again, I've said it a number of times, but I really want to thank you for always sharing your insights, Nicola. And thanks for taking the considerable time and effort to produce your expert and reliable annual BMM property market report, which we'll have a link to in the show notes for those who want to really dive into the details of Nicola's commentary, along with a whole host of very highly respected property professionals from around the country. But before we go, and while I've got the opportunity, Nicola, on behalf of the large and loyal Property Hub community, we just want to thank you for the very important and enormous role that you and Pippa continues to play in representing the silent majority of unsung hero investors. And let's hope that governments and policymakers are finally getting the message that you were getting through to them last year, that mum and dad investors are actually the solution hidden in plain sight to our housing woes, and that they actually start to embrace them like friends rather than treating them like foes and villains in this complex and dynamic, wonderful world that we call property. So thanks again for your time on the show, Nicola.
Oh, thank you for that, Bushy, and again, thank you for your support of Pippa and myself, professionally and personally too. Thank you, and we're very much looking forward to doing more with you this year, perhaps in October in Melbourne again. So thank you again, and we're always so grateful of your support and the wonderful work that you do for our sector as well.
Thank you, Nicola. Let's stay in touch, and we'll talk again soon.
Thanks, Bushy.
Successful property investment is a game of finance. Do you have the right team and the right game plan? Realty Talk is brought to you by Know How Property. More than mortgage brokers, Bushy Martin and his team of investment architects set you up with a sustainable strategy structured to lower your costs, tax, risk and stress while increasing your capacity for growth. Know How has helped over 1,900 homeowners and investors secure more than $800 million in property wealth. So get set to live more, work less, and live your legacy. Want to know how to invest in your freedom? Visit knowhowproperty.com.au.
Realty Talk exclusive to the Property Hub.
Now, next in our continuing special series on the property market forecast for 2024, thanks to Bricks and Media, I can't even say it right, thanks to Bricks and Mortar Media's end report, we've got the real pleasure of catching up with Kate Hill, who's an avid investor, an award-winning author, and also the founder and driving force behind national property buyers agency Advisable. So welcome back to Realty Talk, Kate.
It's fabulous to be here and to talk with you.
Yeah, I always like having a chat. I love the level of detail that you go to in all of your statements. So you're quantifying what you're saying rather than some motherhoods that we hear from other players in the industry. So I guess just to set the scene, Kate, given we always have interesting years in property, but from your perspective, how did property perform against your expectations last year, and what, if anything, varied and why?
Well, I don't even know where to start. To be honest with you, and this is going to sound a little arrogant, it's not how I meant it or how I mean it, but it genuinely, things performed pretty much exactly as I expected them to, because I've been seeing the major supply shortage for a little while, as well as sort of various government, let's not call them initiatives, but policies and whatnots too that have scared a lot of investors off over the years. So I feel like I've been screaming about a supply shortage for years. The demand was going to be huge as soon as we all got over the fact that COVID, wasn't the end of the universe. So it really, in spite of interest rate rises, prices rose in most jurisdictions that I deal with, which is across Australia. Yep. And really the factors that put pressure on those prices have been pretty much, again, as I predicted, which is strong local demand, hundreds of thousands of new migrants, billions of infrastructure spending in the right areas, and this undersupply of properties for a number of reasons. So yeah, it's been a strong year as I expected.
Yeah, they're great. And again, as a fellow contrarian who focus on the fundamentals, not on some of the scare factors that people like to focus on, I'm now interested in sort of pivoting into your future view, given how consistently on the ball you've been with in the previous report. So what's your overall view then on how property is likely to perform across the country in the year coming?
Right. Well, I would say it's going to be a fairly similar pattern that we have seen through the ages, Bushy. You get these panic merchants, the media, who whip us all into a frenzy of uncertainty and fear just to get those clicks. They have little facts to back up their stories. It might just be somebody's press release because they're marketing something or another. And then really when the end of the world doesn't happen, because we do have all those growth drivers in place, people just start to calm down and they kind of get on with it until the next frenzy, somebody decides it's time for us to panic about something else. And really that's what we've seen. I think that's going to continue. Like I said, our area of speciality is Australia. We're licensed in multiple states. We are buying all over the place, and because we customize each property purchase for every single client, so it just depends on what portfolio they've got. So we've seen that frenzy in Perth, in Adelaide, because they are the most affordable options for investors and they give great yields in this very high interest environment. I really don't see a lot of that changing anytime soon. Like I said, strong demand, all these new migrants, there's still those, like you just said, those fundamentals in place in a lot of those good areas. And we will continue to have an undersupply of property because they are not building enough and the demand is huge. So that is...
And I think that probably, given that there's a better than even chance that the rates may actually start coming down again, in conjunction with what we're seeing on the mortgage broking front, and that is that a number of lenders now who aren't writing the business they're used to are starting to soften some of their lending policies. And that combination is likely to boost buying capacity, which is going to put further demand pressure on the properties available. So everything's certainly pointing to a pretty strong year ahead. You mentioned some of the key drivers that we need to be looking out for. Are any others that you see influencing property conditions that we need to be aware of?
Really, I think we can drive that down into sort of specifics in terms of area, if you like.
Yeah.
Some of those sort of important, sort of good and bad, if we can call it that, sectors. I think Victoria generally is going to be an interesting one to watch. I've actually just done a YouTube video on that, if I can send everyone out there. So as I'm sure a lot of people know, the Labor state government there have made conditions for investors and second home owners quite prohibitive. Yeah. A lot of investors have either sold out of the market or really are no longer interested in owning an investment property there.
Yep.
This contributes to critical undersupply of housing, which the government just does not ever seem to understand. I just don't get it. Because they're certainly not supplying enough housing for that demand themselves, right? So rents
and they're penalising the very people who can add the supply by upping land tax and making it the whole tenancy legislation is getting tougher and harder. Compliance conditions on property are getting more onerous, more expensive. But you couldn't make it much harder in Victoria.
They probably could, but let's not hope they don't. But it's I'm not saying that, that of course tenants should have rights and they need to live in safe properties and all that stuff is important. But I think because of all of that rents are just going to keep going up. Yeah. Their policies will always hurt the people that they say that they want to help. But at the end of the day, it's really it's politics. Rather than actually trying to solve a real problem. They need to be seen to be doing something. They know who their electorate is. It doesn't solve the problem. Yeah. Shut me up, I'll shut up. But I just think there'll continue to be but there continues to be a really good demand for housing in Victoria. That hasn't changed. People are still moving there. People still need somewhere to live. Yeah. It's just that demand for investment properties is just not probably going to come from interstate or probably from within Victoria now either because of that second home, the investor second home land tax.
Yes, exactly.
Yeah. So rents are just going to keep going up because there aren't enough rental properties. And I have property in Victoria and I'm seeing it happening firsthand. So yeah, I think there's also an opportunity there for people who I realize it's challenging to kind of think and be counter-cyclical, but don't feel the need to follow a herd. Look at the opportunities there. So sort of on that note as well, I would say really watch out for that frenzy that I have witnessed. I'm still witnessing in Perth, to some extent in Adelaide as well, but really inferior properties being bought by alleged experts and professionals that, in my opinion, really just won't stand the test of time. Really do your due diligence over there. And I know this is controversial, but perhaps even a time to think about not buying in Perth, go elsewhere. There are real opportunities. If I can tell a quick story, there was the property that I looked at quite recently where the one literally next door sold, I think in October, for $60,000 or $70,000 less than they're asking for the next door identical property now. Now, that is a lot of money in Perth. It's a lot of money anywhere, but you have to think about how that value can be sustained in that area once this all dies down, which it will. It will.
Right? Certainly when hotspot hits the headlines, then it becomes a self-perpetuating market to some degree. So am I reading this right that you're probably seeing that both WA and to a certain degree Adelaide has probably hit the crest of its wave and it's likely to plateau or other from here? Would that be your read?
Adelaide less so, because it's just much more of a steady, stable performer. Perth has a real history of being quite volatile. It is, I know not everybody works in mining, I appreciate that, but at the end of the day, it's very dependent and reliant on that mining industry for the economy, regardless of what everybody says. So when that sector is affected, Perth prices do drop. They don't kind of crash often, but they can drop quite significantly. Developers start going in, there can be an oversupply. Your rents drop by $150, $200 a week. So you've now paid at the top of the peak for a property that could be potentially in an inferior location that, sure, you're getting $600 a week rent for now, but in 2 years' time, how are you going to be when it's an older property? You're not going to have any depreciation, inferior location, and your rent drops by $200 a week. Don't put yourself in that situation. Adelaide is different. It's a much more steady, as I'm sure you know, a much more steady performer. It doesn't have that same market volatility. It's not the same roller coaster ride. And we haven't had the same sudden boom that we have in Perth. It's always been affordable. And of course, the reasons why those markets are and have been so popular is because of everybody's borrowing capacity going down. So everyone's been driven into
affordability, absolutely.
Those supermarkets, right? And those awesome yields, higher interest rates. Of course, it's a recipe for a frenzy, which is what we've seen. So, but Adelaide is different and continues to have really good, steady growth drivers. And I'm not saying Perth won't continue to grow over the next little while. It's just, please be careful. I'm just urging caution.
No, good point. So we've covered I guess, the bottom half of Australia. Let's talk about Southeast Queensland and other parts of the country.
Yeah.
What's your thoughts around those?
Love it. Still love it. Really, again, similar to Adelaide, good, steady performers around the Sunshine Coast. Again, an opportunity if you do have more money to spend, a very stable market, hugely desirable, a lot of interstate migration that happens into that area, not just, from overseas. But it is that bit more expensive, but it does have good yields, for a more expensive market. So love the sunny coast, that whole Brisbane, like you say, that southeast, back into Toowoomba, again, great diverse economy. Love those areas that have seen really good growth. Don't see that lessening anytime soon. And once, as we said, those if interest rates come down a little bit, it will make those areas more affordable to those people who are just a little bit restricted by their borrowing capacity at the moment. Hence,
good call. About other areas of Queensland or other regional or other markets around the country that are worthy of note?
Always, like I said, so Victoria, I'd be looking at your bigger regional centres, your Geelongs, Ballarats, Bendigos. Please don't discount them. They have awesome fundamentals. Yep. Where else am I? Yeah, very much southeast Queensland, and Sydney, Melbourne, of course, but Brisbane itself for those who have the funds to do that. But I realise at the moment that's, like I say, it's prohibitive because interest rates are so high and the yields are already low. Yeah. So, and who wants to lose that amount of money? You need superior capital growth to make up for the money it's costing you to hold those properties.
Yeah, 100%.
Year in, year out. But it does lead me, if I may, quickly to another point, which is really. It leads into the increasing popularity of the apartment market, so which is a lot more affordable by nature, right? Smaller properties. So I'd say sort of beware of just assuming, that the larger properties are going to be more desirable in terms of house, a big house, large land. Overall, our family sizes are shrinking. The government has studied this at length. They've made projections. So that you look for your smaller properties, like a smaller 3-bedroom property. You're hedging your bets a lot more than just don't assume it needs to be a 4-bedroom on 600 square meters of land with, all this stuff going on. The 3-bedders, a lot more desirable, a lot more in demand because of our shrinking family unit, lone person households. Unfortunately, it's sad, but are the single biggest increasing demographic.
Yeah, it's a good call. It's a very good call, actually. In that context, I love that. Are there any sort of surprising or wild card elements that are likely to come out of the box over the next 12 months that may influence property conditions, as you say?
Oh, look, maybe. Not that it hasn't really already started that I am seeing. Like I said, really that apartment market, I think that took people by surprise because we had those enormous vacancy rates during COVID. And we have those here in Sydney, particularly. We have those, construction, let's call them issues. It's not had great press over the last few years in terms of major structural defects coming to light in a lot of our newer apartment blocks. So but they continue to be, like I say, an asset class and a property type in demand. So, and I think that has taken people by surprise because people haven't really followed how our demographics have shifted during and after COVID. So, yeah, I would say, again, watch for the smaller property type becoming more and more in demand. So
that's a good one. The old crusty chestnut of negative gearing is starting to get some media exposure, given the modification of the tax regime in recent times. What's your read on what, if any, impact that's likely to have, given the Greens like to yell this from the rooftops?
Well, they do, but I'm sorry, but what clout do they have really? It's just it doesn't. How long have we got? It's a topic all by itself. I know. I think it continues to. It's news because it affects a lot of people, and I think that's what people have to just keep in mind. Why these things keep cropping up in the media. Yeah. Again, it's not going to solve the problem, them doing anything about it. Every time they've tried to change it, there's been the most enormous backlash, with good reason. And good luck supplying Australia's housing if you do. And I think they know that. They know that. But they have to be seen to be considering it, for a certain part of the electorate. But yeah, I do.
Yeah, let's hope common sense recognises that private investors are the solution to the housing woes, not the problem. But they actually start re-incentivising and not penalising them, as we've seen in recent times.
Yes,
I'm looking forward to the day that the policymakers and politicians get smart enough to recognise that investors are actually their best friends when it comes to solving the housing issue, but
yes.
Maybe I'm optimistic on that.
We live in hope. I know
we do, but look, as always, I feel like we've only just scratched the surface, Kate, and there's a lot further that we can talk about, and we will get you back on the show to deep dive on some of these areas that you're pretty active in. Which I think could be, a great service to people who are really seriously considering getting the right type of property in the right location for the right reasons. So I guess bringing it all to a head and to sum things up, if you're looking for one word that described and captured what property conditions are likely to be like this year, what would that word be for you?
I'm going to be horribly boring and say stable. And really, I don't mean standing still. I mean steadily stable, and steadily rising. But that was 2 words, so I couldn't use that, right? So I had to come up with one word. So, I think all good areas with those fundamentals, and if you buy the right property type, they will continue to grow. As we've said, if interest rates fall a little bit, I think we'll start to see more listings come on the market, which gives sellers the confidence to put their properties on the market, because they often will then, if they're selling, they're often buying again. They don't want to join this frenzy either. And I think it might even things out a little bit, like I've said earlier on, in terms of Perth and Adelaide, because the more expensive those markets get, it obviously brings them more in line with the rest of the country. It makes them less affordable. Yep. So when people have that little bit more borrowing capacity, it makes their cash flows a little bit more appealing. They will start to consider all these other areas that are great. So I think we'll just see kind of consistent, steady growth, and there's always the potential for a little bit of an oomph, of course, when interest rates drop. But I think it will bring more listings on the market as well. Hopefully.
Yeah, I totally agree, and I think you and I have been in the game for a long time. I think the pleasing thing for me is that I think it's taken us 2 or 3 years to shake off the post-pandemic impacts. I think we're actually finally getting close to the normal's a dangerous word at the moment, but I think we are getting back to a point where locations, ad hoc, out of sync basis, are going through their own cycles, independent of others. which creates plenty of opportunity if you know what you're looking for and you've got the right team behind you to find and negotiate that. So I think it reinforces to me that while good opportunities are going to be probably harder to find to some degree, if you've got the right people doing the research and validating the exercise, then it's still a great opportunity to take advantage of. So look, as always, Kate, I want to thank you for sharing these great insights with us. And it's clear from your forecast in the BMM 2024 property market report that there are still some affordable property locations that can still be across the country. But as you've made the point very well, buyers will face increasingly stiff competition as listings probably remain low, even though there might be a few more. And yes, demand is definitely going to remain high. So ignore the mainstream media sentiment picture. And it's always a great time to be investing in property if you know what you're looking for, where to look, and most importantly, have the right independent professionals helping you. So thanks for all your help on that, Kate.
A pleasure. Been lovely talking to you.
Thanks, Kate. Now, for those listening in who want to read the full story on Kate's thoughts and want to get their hands on a copy of the BMM 2024 Property Market Report that includes forecasts from a whole host of leading property professionals around the country, just click on the link in the show notes. And if you want to take the conversation further and keep that going, join us on the Property Hub Collective Facebook community, again, by just clicking on the link below. So keep watching for more here on the Property Hub.
Hi, just before we go back to the show, I want to spend a few seconds and tell you about a book that was sent to me that's now become my go-to reference when I'm looking for inspiration about property investment. You know, sometimes it's not about knowing all the answers. It's certainly more important to know what questions to ask. This book by Rusty is called The Property Wealth Blueprint. And it's one that you don't read just once and then put it away. It stays out as a reference. It's a book that you go back to time and time again, as I do, because it's packed with personal experience and with great examples of how to get property investment right. It's very frank, it's to the point. And as you can see here, I've needed to bookmark several points, and I can tell you that it's a constant companion on my desk here. The remarkable thing is that it's absolutely free on Rusty's website, getrare.com.au. Get Rare. It's a gateway to a richer life. The website there for you again, getrare, rare.com.au. So get this book, get it for yourself.
This is Realty Talk, powered by realty.com.au.
And that brings us to the end of this week's show. Make sure that you don't miss a single episode of Realty Talk or Bushy's Get Invested podcast, delivered to you each week, and you can do that by subscribing to the Property Hub now on your favourite podcast player or wherever you are listening to or watching this show. Also, join the conversation anytime on Facebook at the Property Hub Collective. Thanks to our supporters and content partners, realty.com.au, BMT, Tax Depreciation, Know How Property Finance, Get Rare Property, and Apiro Marketing. I'm Kevin Turner, and on behalf of Bushy and the Property Hub team, we look forward to seeing you again next week.